Should I use New Zealand home loans and are they any good? Hi, I'm Ed McKnight, economist here at Opus Partners, and in today's video, you're going to get the inside scoop on New Zealand home loans. Now, big disclaimer first of all, New Zealand home loans are a mortgage brokerage, and here at Opus Partners, we have our own mortgage brokers under our Catalyst Financial Company. But even though we have our own mortgage brokers, this is going to be a fair and honest review because the truth is, for some people, New Zealand home loans is absolutely the right fit for them, but for some other people, it's not. Now, let's just talk about the difference between New Zealand home loans and other mortgage brokers. The main focus for most mortgage brokers out there is to help you get more loans, to help you grow a property investment portfolio, because the main way they make their money is by writing new loans. Now, the focus for New Zealand home loans is a bit different. They're all about taking your current debt and helping you pay it off much faster. Now, you might be wondering, well, how do they actually do that? There are two ways. First, they've got a piece of software, and then they're also using some specific strategies, and we'll get into the strategies in a moment. But this is what their software, Debt-Nav, looks like. So when you sign up to become a New Zealand home loans client, you will get a login to Debt-Nav. And here is an example of what a real New Zealand home loans client login looks like. Here you can see the grey line shows them paying off their mortgage if they just paid off the minimum repayments at the bank. The red and the blue line shows them paying off their mortgage much more aggressively after they've worked with New Zealand home loans. By doing this, it really means two things. One, you're going to pay off your mortgage faster, and that's what New Zealand home loans are all about, but you will also save significant amounts of money on the interest that you are paying if you follow those strategies. Now, you might be thinking, well, that sounds absolutely wonderful, Ed. What are the strategies? How do I actually do that? So there are two main ways. First of all, you make extra repayments against your mortgage. That is the one that matters most. That's the one that's actually going to get you debt-free faster. The second, which is not as important but sounds really sexy, is what they call channeling or offsetting. Let me take you through both of these, and I'll give you an example. Let's say you got a 500k mortgage and you're paying a 4% interest rate. If you go to the bank and say, what do I have to pay? They'll say, well, your minimum repayment, if you're going to pay it off over 30 years, is $550 a week. Now, when you work with New Zealand home loans, they'll get you to fill out a budget. And that will show, well, is there any extra money left over? Could you afford to perhaps make a higher repayment to your mortgage to pay it off faster? And after doing that, they might say, well, actually, you could afford $650 a week, an extra $100 a week. Now, it is amazing how much of a difference that extra $100 a week actually makes to your mortgage. You'd end up paying that off 7.5 years faster than if you just made the minimum repayment. So as long as you stick to the budget that you've created with your New Zealand home loans advisor, you can save significant amounts of time, significant amounts of interest. Let me put that into perspective. So again, if you paid off your 30-year mortgage, making the minimum repayments, you'd pay it off in 30 years and you would pay $360k worth of interest to the bank. This is why the banks make so much money, because mortgages are expensive. Now, if you were to pay $650 per week, you'd pay off your 500k loan in 22.5 years. But on top of that, you would save just over $100,000, six figures of interest, just by paying off that mortgage $100 a week extra per week. Now, the second strategy that they implement at New Zealand home loans is what they call channeling or offsetting. Again, this is less effective, but sounds very cool, sounds very sexy. Here's how it works. Again, you got a 500k loan. And let's say that you're saving up for something, saving up for a holiday, saving up for your kids' education, but you've got some money set aside, 20k worth of savings, let's say. Well, what happens when you offset is you are only charged interest on the balance. So you've got your 500k loan, you've got 20k in savings, and if you offset these or you channel them, then you are only charged interest on the balance, which is 480k. So the strategy here, if you're working with New Zealand home loans, is to put all of your repayments into your offset and then use them or channel those extra repayments to make sure that you are paying less interest or charge less interest. It's a bit more complicated than that, but we're just talking about the high level stuff. Now, what's important to know is if you spend everything you earn, if you earn $1,000 a week and you spend $1,000 a week, channeling is not going to help you. In fact, you may end up paying extra interest because the channeled balance is often charged at a higher interest rate. But if you are able to make those extra repayments, you can save significantly. So if you go and use them, then you generally will only work with less than 5 lenders, usually Kiwi Bank and Sovereign. So they're not able to shop your mortgage application around with more banks like a normal mortgage broker would. They're not able to see whether maybe if you don't fit Kiwi Bank's lending criteria, could you go with Westpac, for instance, because they only work with a smaller number of lenders. Now that works fine if you only have 1 property, maybe 2 properties, because you only need a couple of lenders. But if you have a larger property portfolio or you're very ambitious, you want to use split banking, New Zealand Home Loans is probably not the right fit. So after hearing the pros and cons, is New Zealand Home Loans the right fit for you? Well, if you've got 1 property or your own home and 1 investment property and your primary goal is to pay off the debt that you currently have faster, New Zealand Home Loans could be the one for you. But if on the other hand, you own multiple properties, you've got a medium-sized investment portfolio, kind of 2 investments or more, and your goal is to grow a property portfolio, then hey, they may not be the right fit for you simply because they don't have access to as many lenders as other mortgage brokers. Now, your next step, if you want to learn more about property investment here in New Zealand, is to subscribe to our YouTube channel and click that bell to get notified about future videos, because every Wednesday we release a brand new video. And after you've done that, make sure you go and check out the Property Academy podcast, because every single day we release a brand new episode, 10 to 15 minutes long, to teach you how to become a successful property investor right here in New Zealand.